Hello everyone, welcome to our Accounting Theory 12. I hope this is the last video for our final exam review. So in this video, I'm just going to talk about each chapter, kind of the brief. I'm not going to really read each chapter. Hopefully you will not be so bored. Okay, so based on the order we had our classes, we first started chapter 9. The main thing is variable costing and absorption costing. So we said variable costing, the main difference is how do they deal with the fixed manufacturing cost, right? Under variable costing, so they only take a variable manufacturing cost for the inventoryable cost or as the product cost. Absorption costing method absorbs all the manufacturing costs, including variable manufacturing and fixed manufacturing. So when we think about the inventoryable cost, how can you tell me this is the inventory? What's the cost of the pen? It's $5 or $10. So we only include the manufacturing. You have to know what's the meaning of manufacturing and non-manufacturing. We watched the video at the very beginning of our classes of the semester. Is that everything happened in the manufacturing department, in the plant, in the for the blue collar people, those are manufacturing part. And then non-manufacturing, like our accountant, CEO, everything related, not in the manufacturing department will be a pure real cost, So, but even for the manufacturing part, variable costing only takes from variable manufacturing cost. Absorption costing absorbs all the manufacturing cost. So I said you have to know what is variable manufacturing. Let's just say a direct labor, direct material, like fixed manufacturing, like your manufacturing department insurance is the fixed manufacturing cost. Your marketing department insurance is non-manufacturing because it's a marketing department. So you have to know those things, right? And then calculation will have different questions. So make sure for the operating income and the variable costing is revenue minus variable cost, give the contribution margin minus fixed cost, give you operating income. For the absorption costing, it is your revenue minus cost of goods sold. So we talk about it's 2 steps calculation. You have to first get your each unit, the inventoryable cost, which is a variable manufacturing cost plus the allocated fixed manufacturing cost. And then you time the units sold. So then you get your gross margin minus your non-manufacturing, get your operating income. And then we said when production is the same as the sales, then the operating income under both methods, they are the same. But if production is more than the sales, then operating income under absorption costing will be more than under variable costing, actually, right? The main reason is if you produce more, then part of your fixed manufacturing cost is deferred, staying in your balance sheet instead of being expensed in the income statement. So when you produce more under absorption costing method, your total expense is less. Part of the expense is deferred as your ending inventory. So we said the difference will be your ending inventory, the units. You produced 5, you only sold 3, your ending unit is 2, times each inventory, the allocated fixed manufacturing cost. If you don't know what I'm talking about, I would suggest you to go back to the notes. If you know what I'm talking about, that's kind of a good sign, right? So basically, those are the main things in chapter 9. And then we also talk about different things like accounting, absorption costing for external. Hey, I think I put it wrong. Yeah, absorption costing for external. We talk about that. It also kind of is a tool for managers to manage their earnings or something, right? So we talk about those concepts, things. Make sure I think it's kind of last slide of your PowerPoint. So I also give you some questions, the example to practice. You don't really need to do everything. I think pick the one you know, when you did the note, you were not sure, now go back to that one. So if you got the problems very sure for the first time, you can just review them very quickly. Okay, so that is chapter 9. I have to say the review doesn't cover 100%, so don't just say, hey, I cannot get an A just because I only focus on the thing in your review video. Don't go to my office and then cry there, okay? Chapter 3, I think this is the chapter most students like because it's related with the 311. We talk about CVP analysis. First thing I want to think about CVP analysis assumption. The reason I put it here because we talk about CPA questions have this type of question. So make sure you go to your textbook 73. And then we also talk about what's the meaning of contribution margin. Definition calculation, especially contribution margin percentage. It's your contribution margin divided by your revenue. So if that is 60%, that means after the break-even point, right? So you cover your fixed cost first. So after that, when you sell one more unit as the revenue, your operating income will be increased by 60 cents after covering your fixed effect. Kind of just an explanation there. We said the tricky is contribution margin plus contribution margin percentage plus your variable cost percentage is 1. So that means 100% minus 40% gives you 60%. Okay, and then what else? Okay, next one, talking about break-even point. Make sure you know what's the meaning of that one. So it's at that moment, you are not losing money, you are not earning money, your operating income is 0. And then so I think this is the one only thing I require you to memorize as a formula. It's your fixed cost divided by your contribution margin percentage. Then says break-even point, you don't have your operating income. Your operating income is 0. So later, if you have a target operating income, you say, hey, I want to earn $100 as operating income. Then the units that has to be sold will be fixed cost plus that $100 divided by your contribution margin percentage. So we also talked about target operating income, as I said, 100%. And the net income after tax, so this should be easy. So let's say tax rate is 30%, after tax is $70, before tax has to be $100, right? And then we also talk about other decisions, like whether you should put advertisement yes or no, how to set your selling price, you know, kind of those things in the handout. The next thing we talk about margin of safety. This is related with the break-even point. So basically, your current sales minus your break-even point will be the margin of safety. This tells you how far away your revenue can drop before you start having a loss. If we want the margin to be larger means safer. That means your sale can drop by a larger amount. Think about your situation. I said, so if your target is 90% in the class, you are currently having 99%. You can drop by 9%, right? Talk about sales mix. Make sure you also know this one. So it's the bundle. You first calculate the bundle break-even point, and then you use the bundle break-even point to time each product. Like for each bundle, you have 3A, 4B, then you time 3 for A, you time 4B. And then last thing, contribution margin and the gross margin. That's also a good part to practice. We said, especially look at it here, right? We said, so if you change the variable manufacturing cost, then it will affect your contribution margin. It will also affect your gross margin. So those things, I think, they are kind of, I give you some questions to practice in chapter 3. I would say chapter 3 not really tricky, just to make sure you understand the logic and be really careful. The next one, talking about chapter 11, for too many things here, relevant information. So this is also related with your chapter 21. Remember, we practiced the one multiple choice there. We said, even in chapter 21, you only think about relevant cash flow. We said that allocated fixed cost is irrelevant when we talk about our cash flow, that multiple choice. And then we only think about short term. So chapter 11 is related with the chapter 21, but it's also related with the chapter 13. because chapter 11 talking about short term, we only think about relevant. We said for the long term, everything is relevant. So in the long term, when we talk about chapter 13, we use the full cost. Meaning of the being relevant, you have to be two criteria, right? It happens in the future and it also makes differences. So you say, hey, everything happening in the future is relevant. That doesn't, it's not right. I said, hey, there will be a wedding in China next year, but that will not affect my final exam. Then it will not be relevant to my final exam, right? And then we said there are some wrong assumptions. All the variable costs that are relevant, all the fixed costs that are irrelevant. Those are the wrong assumptions. Then we talk about if there is no opportunity cost. The keyword you want to look is when the company has idle capacity, excess capacity, something. You only think about relevant cost. So there are two different situations. It's a one-time only special order. Should we take the order, yes or no? So our minimum price is as long as the order's price is the same or larger than our relevant cost, then you take it. The second situation is make or buy. We also talk about that. You have always three columns, right? Make or buy and then difference. Take your order, don't take your order, and then the difference. So go back to your notes. The next one talking about if there is opportunity cost. What's the meaning of opportunity cost? Is you have to give up something to get something. The situation is if you are already working full capacity, you are preparing 24 hours every day already, right? I said, hey, you have to do more work. Then you have to give up like financial accounting for our managerial accounting. So that is your that's your opportunity cost. So we said opportunity cost is just one type of the relevant cost. You have to think about other relevant costs, directly but direct material, those things. Sorry, I'm just have been thinking, right? You are working already full capacity and you have alternative use. So if you don't have alternative use, you just leave it idle, then there is no opportunity cost. We have talked about this also. Talking about product mix decision, we said now we have to choose the one with a higher contribution margin per constrained resource, right? Every day you only have 24 hours. We said that if you study 4 hours for managerial accounting, you will get A. But if you want to get A for financial accounting, you have to study like 10 hours. So we have only every day have 24 hours. So you choose the one that gives you a higher payoff within the constrained resource. And then we also talk about add or drop customers. We said the main difference is when you add a customer, you have to buy new equipment, right? For new customers, you have to buy new equipment. In that situation, the depreciation expense will be relevant. But you already had this equipment a long time ago. Now you are thinking about dropping some of your customers. Under that situation, the depreciation expense is irrelevant because you already bought this equipment a long time ago. So no matter you drop it on me or you don't drop it, it will not affect the depreciation expense. And the last one, we said keep or replace the equipment. Chapter 11, now you look at chapter 11 is so easy because we don't think about the tax effect. You can compare chapter 11 with chapter 21. Chapter 21 talking about the tax effect. So that is why we have to think about gain or loss. We have to think about book value, depreciation expense, accumulated depreciation expense. So those things are harder in chapter 21, but easier in chapter 11. So those things I think multiple choices questions will help you to understand chapter 11. I'm sorry if it's too much. Then from that one, we went to some light chapter, I think, except for chapter 14. Chapter 14, as I keep saying, two main parts. One is about the customer profitability. The other one is all the variance, right? So we said you want to, for the customer, there are 5 levels, not only for the customer, but unit level, batch level, customer level, channel level, and then division level, right? There are 5 levels. Cost, make sure you know those things, and then we want to have customer profitability analysis so that VIP will get more attention, right? But we also said there are also other factors to think about when we decide to drop our customers, yes or no, especially like potential growth, whether you can learn from your customer, whether the customer can refer other customers, so something like that. And then we also said there are two ways, right? We said either we allocate the division level or channel level to customer. If you want to allocate, there are 4 criteria you want to follow. And then if you don't allocate, then you just subtract the total amount directly. So I think we practice one problem there. I think most of you got that one in your exam too. Then the other main part for chapter 14 we have focused a lot is the variance. Make sure you know the calculation, interpretation, relationship. You know, static budget variance can break it down to flexible and the sales volume. Sales volume can break it down to sales mix and sales quantity. Sales quantity can break it down to market share and the market size, right? Make sure you know those things. And then we said, if we can ask you, hey, what's the company's sales variance, sales volume variance, or sales quantity variance, you should be able to know that. But I said, if I ask you, you have 2 products, laptop and then computer, right? Laptop and then desktop. So I said, if you want to use the formula, so your first variable is always the total units. It's always the total units. So even I ask you, hey, what's the sales variance, sales volume variance for desktop? If you want to use the formula, you have to use the total units for sales of the desktop and the laptop. There is one question, I think we talk about that. I think it's on your also in the second exam, so make sure you know that one. And then one is that the other thing, a new thing, students that don't like is composite unit and then especially the market share and the market size. If you want to get more practice, you know, we practice several in the handout, you know, using the textbook example. And I think you have to kind of get a general idea of those new materials. Okay, so from this page, I kind of said all of the multiple choice because I feel here the suggestion I can give you is more focused on the calculation. For the definition concept, you definitely have to read the textbook handout. You know, I cannot just say, hey, I just know like the criteria or something. You kind of for the conceptual thing, you kind of have to go through all these handouts or the textbook. But your English is better than me, right? So I think you go over it one time, you know, especially before the exam, you should be able to get it. Chapter 13, and then talking about pricing decision. This is a long-term decision. So you think about chapter 11, talking about short-term decision making. We first said there are 3 factors. Remember, cost, the customer, and then computation, right? So under what situation, which one is more important? We said if there is no competitor, you all think about its customer. If there is competition, you cannot really decide the selling price. All you can control is the cost, right? And then we also talk about for purpose of cost allocation. You know, just get a general idea of this one. We said there are 2 ways to, I think I put it even wrong, market-based, and then, so I should put it is cost plus, okay? So the next one we said for the long-term pricing decision, we have 2 approaches. Market-based, the main thing is we have to derive to get the target cost. You are thinking about getting a t-shirt and then everybody sells at $10. You cannot sell more than $10. So you can only sell at $10. But you said, hey, every teacher, I want to earn $2 as income, as a profit. So you have to control your cost under $8, right? So if your current cost is 8.5, you have to do value engineering to decrease your cost from 8.5 to 8. But if your current cost is 7, you do not need to do value engineering. And then when we do value engineering, there are different questions I think we have practiced. You used it to be $10, you know, for your t-shirt, but this year your competitor decreased it to $9. You want to be competitive, so you want to decrease your selling price to be $9, but you still want to keep the same level of your operating income. So now what is your new target cost, right? So those are things. As I keep saying, if you know what I'm talking about, that's good. If you don't know, go back to your, kind of give you a red flag, go back to your notes handout. And then we talk about those concepts, value added, non-value added. We want to keep value added cost. We want to eliminate non-value added cost. Cost incurrence is when the manufacturer, when you really cost incurs. Locked in cost is before things even happen, right? Kind of before things really happen, before you start paying the cost, it's already locked in. The next one is cost plus pricing calculation, especially for the markup. We have been, I think you should feel better now. We said you use total assets as the investment, and then you invested $100 every year. You want to get the $10 as the return. 10% as the return. So every year your markup has to be $10. $100 investment times 10% as the return. So that is your markup. That's your profit. Then you use that to add your full cost. You will get cost plus pricing. And then we said, hey, there are also other cost bases you can use. You can use variable cost as the cost base, whatever. But if the cost base is large, the markup will be small. If the cost base is small, the markup will be large, will be big. So you can see some multiple choices related with that part here. And then I said, all the conceptual questions you have to take care of by yourself. Chapter 12, I think is an easy, lighter chapter. So you just, one word is strategy, you know, 5 strategies based on 5 elements, 2 strategies based on 5 elements. Sorry, I don't remember all. I think it's bargaining power with the customer, bargaining power with your supplier, current computation, and then the possible entrance, and then equivalent of your products. I think those are the 5 things, right? And then we said 2 strategies. You have to know detail. I bet everybody knows 2 strategies: product differentiation and then cost leadership. But you have to know what's the meaning of that one. Like a cost leadership, you have to do value re-engineering kind of. Product differentiation, you have to focus on R&D or those things, right? And then we said 4 perspective of balanced scorecard. So definitely that is the thing. As I said, financial is easier. Customer is also okay, right? And then we said our customer has a customer and a market share. And then we said that the other one is learn and growth. That has 2 parts, employee part and then your information system. So all the others are internal business. So make sure you go back to that slide, read it one more time. And then the second part, talking about profitability analysis, we said, how can we really make sure our strategy works, right? Last year, our income was 100, this year 120, we increased by 20, that's a good sign. But how can you make sure that 20 increase is because we implemented our strategy properly, right? We break down that $20 to 3 components: growth, price recovery, and productivity. So we said no matter what strategy you use, you want to see favorable growth component because you want company to grow. And then if you use cost leadership, you want to see favorable for productivity because productivity is whether your production is effective, yes or no. If you use product differentiation, that means you can sell at a higher price, so you can recover your cost. You want to see favorable price recovery component if you use product differentiation strategy. So yeah, sorry, I said, because this chapter doesn't really have a lot of calculations. So if you want to get a concept questions, make sure you read all of the things, just go through quickly. And the last one, I'm not going to review chapter 21 and chapter 23. I'll talk about them briefly. About chapter 10, talking about Excel, and then your group project too. So first thing is the definition from chapter 10. We talk about this is your dependent variable. Those are called the intercept, the coefficient, the independent variable, error term, And then remember, we did hand out those multiple choices from the CPA. So make sure you know those things, okay? And then that is from the chapter 10 actually. And then 2, 3, 4, they are from your product. So basically, you have to know how to get right which one regression model is better. We said check p-value, smaller better, r-square larger is better, coefficient larger is better, right? And then we said how do you interpret the model if it's continuous variable, if it's the dummy variable. We said the model only gives us the predicted value. It doesn't really give us each specific accurate individual value. So we talk about the difference, the actual and the predictive will be the effort, right? How do you interpret those things, and then how do you make predictions? So we say, especially we did this in the project. So as long as you did the project, you should be fine. If you were not in my class last time, this is how I got everything. So I downloaded all my handout from Blackboard. You already have this. So I kind of go through each question. I think, hey, this one important, this one is important, this one is important. That is where I put in this review package, right? I said, I personally think multiple choice 2 is important, question 5 is important. So I go through each question, I think about those, how can I combine them together, you know, and then how can I adjust, change some numbers, and then make them to be in your final question. So those questions will not be directly in your final, but you will definitely see similar questions with different numbers, maybe different situation. I think that's all I want to say. I still have chapter 21. I think you have to know everything about chapter 21, you know, those 4 measures, NPV, IRR, payback, and then AARR, and then think about all the relevant cash flow, right? We talk about relevant cash flow, 3 parts. Initial, you have 3 parts, and then every year annual, you have 2 parts. Disposal, terminal, you have 2 parts, right? I hope you still know what I'm talking about. So those things, and then also some terminology, concepts thing. I think those are for chapter 21. Make sure you really get the problem ready, and then talk about chapter 23. So I think only 2 main things in chapter 23. Those 4 parts are return on investment, residual income, and then WACC, we call it value added, and then return on sales, right? We said make sure you know which one is which one calculation, and then we said especially for the WACC, we talk about after tax interest rate. So that's definitely will be your final. I think those are the main things in our final. I'm still working on your final. I will definitely post everything I have as soon as I get better idea. Okay, I think that's all I have for this video. As I keep saying, if you know what I said, that's nice, but doesn't guarantee you will get A or B. If you don't know that kind of red flag, it's better to go back to your notes. Okay, let me know if you have any question, and then I really appreciate that you spend the whole semester with me. I enjoy it every day, every time when I go to class. Thank you, all my students. Thank you, and good luck to your final. Thank you.